Guys, welcome back. We got another VIP talk today, but it's not a clear and a real VIP talk. It's more like a talk to a real guru. And David
Okay.
Morgan, welcome back to our channel. I really appreciate the time today. David, what do you make up of the silver market? It's rocking crazily, actually. Tell us what you think, what you do, and how do you play the current markets?
Yeah, it's a tough one, Frank. Thanks for having me back. It's good to be with you. And I shut down some of my windows before we started the interview, and I saved one. It's my quote. I won't get it exactly right, but around 2003, David and Smith and David worked with me for like 2 decades. Unfortunately, this will be either year two or three of his departure in September, or actually last month. Anyway, I made a statement that there will come a day where all of the management, deep storage, a couple other metaphors will go away, and silver will be hard to obtain, and that will become known as the Great Silver Crisis. I think the last 4 or 5 words are exact. It was basically all the things that have surrounded gold as well, but primarily the silver market, and that these will basically unravel and we'll have a new, you know, a new day. And so, before we go further, I want to make one other comment, Frank. And of course, I am a free market thinker, and certainly doesn't mean that I'm always right. I'm not. But there's sort of a group of individuals that I admire greatly, and I don't discount, thinking that we'll get through the $50 level with, like a knife through butter, as an overused metaphor. I don't think so. I think differently. I think we're going to stall out around the 50 level. It could be 48.9, it could be 52, 53, but somewhere in that range, I think that there will be enough margin increases on the COMEX where they keep increasing margins, which always takes the market down eventually, and or more short selling, and it'll probably be an and, so it'll be increasing margins and more short selling. But it doesn't scare me. It does, I'm mentally prepared for it. However, I do think we will get through it like on the next try or perhaps two. So once that's accomplished, I look at it as maybe crossing a Rubicon type of a moment. I don't want to be a drama mama, but 50 has been the nominal number that's held silver down for like 50 years. So once we get above that nominal number, then we are in new territory. Everyone that's ever owned silver from the time I was born has it at a quote unquote profit. Obviously, $50 in 2025 has nothing close to the value of $50 in 1980. We're all aware of that. But as far as the psychology of the number 50, so I look at it like it's the banks versus the people kind of a moment. And you can give me your take on what I'm saying, but it's almost like the bullion banks slash controllers slash spoofers slash shorts will have a new day, and so will we when we get past the 50 mark. So I'm looking forward to it. It may go through quickly. If it does, no one will be happier than me. Like they don't have any defense, we're on our way. But being in this market for over 4 decades, as you know, Frank, and seeing the shenanigans that have been pulled again and again and again, not only with all the spoofing that's been brought to light the last decade or so, but also their old playbook. It works very well. Increase margins, increase margins, increase margins. You squeeze out the public early because most public traders are undercapitalized and they leverage too much. And then even the hedge funds have only got so much money allocated to silver. They might have more in the bank, but they're only allowed to put in X amount into silver. It exceeds X amount. So anyway, I maybe spoke a little longer on that than I planned to, but what are your thoughts about the $50 level?
David, the interesting story and the past couple of minutes when you told me like your idea about the market, I had already like 20 other questions picking up, like coming up into my head. First of all, obviously you mentioned the 1980 story, the Hunt brothers. I was maybe planned. I was not quite existent back then yet, but the market's been shooting high and I'm honestly at the moment a short seller. So like I felt, wait a minute, like from a technical perspective, the market been rocking high, but I feel the same story. It's just moving too much to the upside. And the $50 psychological technical resistance level is what is just in my head where I feel short term for a market like silver, talking gold maybe later, is just ripe for a bit of a correction, right? Which would be just healthy, right? In a bull market.
Absolutely. I mean, we need corrections and we need to build this market up relatively slowly. I mean,
Mm.
as I've said so many times, 90% of the move comes in the last 10% of the time, which means that the acceleration phase, we have entered the acceleration phase. But the tail of the acceleration phase, or the last, weeks or month or two, is super acceleration. What I mean by that, I mean, it's a parabolic move. Right now, we are moving too far too fast for what I would consider to be a healthy market. And remember the function of the bull market. I mean, the bull analogy is really a good one because being a bit of a Westerner and being to a few rodeos and knowing a few real cowboys, actually, the bull rider, the limit I think is 8 seconds. But the metaphor is it's very, very difficult to stay on the bull. And the bull market will have massive corrections along the way to shake off what we can refer to as weak hands or people without conviction or over leveraged people or people that, okay, that's it, I'm out. They have a problem. So that day is coming. I just can't look you in the eye, Frank, and say it's going to happen next week. But I will say what I've told to not very much in the public. I don't think anyone in the public, but in my private work, consultations, the reports, etc., is I've told everyone to let's sit on our hands for all of October. Why? Because although I don't adhere to anyone else's work entirely, there's certainly some really smart people out there that I've learned from, continue to learn from, and I say are better than me on different areas of the market. One being Charles Nenner, that I referred to a month or two ago in my report, and he's looking for a pretty big correction in October for the stock market. Now, if that's true, it could just take gold and silver down with it, which it always has on a big correction. And we get an opportunity to re-enter the market, cover your shorts, whatever. So if I'm wrong and you sat on your hands for a month and the market's higher, so what, really? I mean, it could be higher, it could consolidate, but I think we're going to see some type of pullback this month.
If I may interrupt, David, exactly my story. September has been traditionally like rather a bear market, right? Looking at stocks, and we can deviate slightly towards the economic demand story, right? But if the demand in the economy is going slightly slower, which, well, it hasn't really much, but like if the demand goes lower, and if stocks at least start to tank, silver would traditionally weaken, right? So give us some insights as you go.
Well, I just, it wasn't a cut and paste. I don't even get Nenner's work, but it was just the macro pitch already outlined. He's looking for a large, I think it was 20% correction. I don't know if it's in the entire month of October, but starting in October.
Mhm.
So it may or may not. We don't know, but it is overvalued. One thing we know for a fact is that the stock market, by any metric you want to use, PE, future earnings, smaller companies, the Magic Seven, any way you want to look at this market, it's overvalued by about 50%. And so it's the highest amount of margins available. And all the smart money is left. I would say all, very much of the smart money is left. Warren Buffett, Bezos, all these folks that have huge stakes in their companies have bailed, you know, multi million dollars worth of stock. And I don't think Berkshire Hathaway's ever had a cash position this big. The cash position of Berkshire holds is worth like 2 years of the silver market annually. and that's just one company. It's a big company, but still. So with all those cautions, I mean, it just makes sense to me to either buy puts if you're in the general market, or stand aside, take profits. You don't want to be greedy. I mean, you don't want to get that last tick. That's an amateur's game. If the market's still strong as far as volume's concerned, you can get out. You might consider lightening up. That's how I see it.
That's for sure. That's for sure. Obviously, one thing which comes to my mind as well, and I'm just eyeing currently the gold silver ratio. Is that something which for a fact you look as well at? Or would you say, like, look, anyways, I've been telling guys like forever that silver outperforms gold as well. Is that currently also technical levels in the gold silver ratio you keep into attention?
Yeah, there is. I just wrote, one of my members asked me about the gold silver ratio, and I went to a pretty big dissertation. I already closed that file, so I'm not going to pull it up and waste our time, but it's important and it can be used, but it's kind of abused all as well. So the current gold silver ratio for like the last couple few decades is somewhere around 40 to 1. In this bull market, it touched 33, 32 to 1. And so silver is relatively undervalued to gold. There's no question in my mind about that. 80's just high. Where will it go? I don't know. I do think that it'll probably do at least as well as it's already done in this bull market, which is 33 to 1. But let's be conservative, say it only gets to the mean, which is around 40. If we're above 80 right now, that means silver will outperform gold on a 2 to 1 basis. So if you're going to make 10,000 in the gold market, you'll make 20,000 in the silver market. Doesn't mean you shouldn't own gold. I think you should. But I still think the market favors silver longer term. But of course, the volatility is something you've got to be able to endure.
Yeah. Speaking of gold, briefly, by the way, like, do you see the gold price justified at current levels, or would you say it's a big exaggeration as well, where you see like, hey, traders, investors alike are like too much piling into to gold as a safe haven bet?
Yeah, that's a tough one as well for um, so how do you look at it? If you look at it like an Austrian, which I'm, partial to the Austrian School of Economics, but it's not perfect, but it's a much better, more realistic and more principled way to look at the economy than the Keynesian model.
Mm.
Nonetheless, the M0 or true money supply going into the amount of gold purportedly held by the Treasury puts you at a gold price, north of 10,000. So that's the theoretical paper price of gold. But yet that doesn't necessarily mean we're going to get there. So there's that part of the thinking. The other part is, what if we do go into a liquidation situation where we have to basically reprice things in the marketplace because the inflation that's taken place so far is so detrimental to society at large that no one could buy food and rent and pay the rent. So now there's pressure for that dollar becoming worth more in the marketplace so people don't, starve. I'm not trying to be dramatic. I'm trying to paint the picture of how to think about it. And in that case, you may say the automobile markets start coming down in price, the housing markets start coming down in price, and gold stays steady at, let's round it up to 4,000 the ounce. So let's, for a thought experiment, say that the liquidation event is so strong, so powerful, and catches so much momentum that interest rates go higher, money costs more, it's more valuable, and the bond market gets cut in half, the housing market gets cut in half, the stock market gets cut in half, and now gold is at 4,000. Well, that's as if gold went to 8,000 and every stayed at the current price, because the purchasing power of gold, although the number has stayed the same, everything outside of gold that you could purchase has decreased by half. Now, that's just a thought experiment. I'm not saying any of this could come true, but that's sort of the trend that we're starting to see. And I wrote about this in the report, I'm going to say May, I think, of this year, that we don't want to focus too much on the paper price of gold. We need to focus on the value and what does it buy in terms of barrels of oil, automobiles, houses, the general stock market, or what have you, because people get these numbers that are purportedly the number. Well, I'm not selling my gold until we get to 6,000. Well, maybe it never gets there. But it served its purpose for you. You bought it at, I don't know, 1,500 or something. So I think it really needs to be quantified for each individual. But I'm here as, you know, a influencer, you know, a guy that has an engineering degree that loves finance and studied this market for 40 plus years. That's who I am. It doesn't make me right, but it certainly gives me a lot of experience, and also in the markets themselves. And one thing I learned pretty quickly in the futures market is to not get too greedy and don't have really any expectations. Expect the market to do what the market does. And the market tells me I'm done, then I'm going to say the market told me it's done. I'm not saying it's done. The market told me it's done. So back to you, Frank.
Yeah, when I interviewed Jim Rogers earlier this year, he's obviously having his nice ch silver chalice in his hand and saying, Frank,
Yeah.
for sure the market is going up. I told you for the last decade, whatnot. But still, talking the US dollar and the trust issue driving up silver prices. And you mentioned briefly about the US dollar. Would you see the trust issue in the US from an outside perspective, as me being German, and the dollar weakness driving silver? What do you make up of this big story from, let's say, an European point of view, potentially?
Well, Frank, I think that's the absolute key. I mean, if you go back to when I first started learning about honest money, when I was, much younger than you and started studying it on my own, the whole thing goes back to confidence or trust. I mean, a con game is a confidence game. And the world had confidence in the US dollar through Bretton Woods all the way to the, cut off of gold in 1971, August 15th by Nixon. And from that point forward, it's changed the dynamic somewhat, but the confidence remains strong up until I think one of the biggest financial footballers of modern times, going into the history books in finance, when the United States basically sanctioned Russia and took their money. They froze it. That's a big mistake. What happened after that? Central banks started buying gold hand over fist because gold is the money of last resort, is a tier one asset. And really, if you go back to the BIS, the Bank of International Settlements, the banker's bank, this is not well known, but back in, I don't know, when was it, 2003, before you could actually buy stock in that bank. Of course, it's private again. But they reported, any bank reporting to them reported in terms of gold, not in terms of treasury bills. So what do they know that we don't? Well, they know that gold is money and everything else is credit. That's what they know. So coming back on point, if we get that psychological shift that there's trust breaking down at the top levels, which it is based on the actions I'm seeing, that's what I said would happen way back when I started learning all this stuff, that there'll be a day that even the bankers start to kind of turn on each other. And, you know, going through the last many, many years, I started to think, am I wrong? I mean, these guys have so much control. It's never going to happen. Well, it is happening. Big money's moving out of the stock markets we just talked about. Bankers are saying enough is enough and buying gold. What if the U.S. sanctions us? What if the U.S. doesn't like our political stance? What if we vote against them in the UN? Are they going to cut off our money? And of course, the BRICS has arisen to say currency to currency, circumventing the US dollar. And the transactions worldwide are somewhere around 58% US dollar. And you go back 2 decades, about 78% US dollar. So certainly the dollar is getting beat up, and that trend will continue further. And again, it comes down to trust. If we don't trust the dollar, we Russia, we Yugoslavia, we a certain bank in Europe, when we rather buy gold instead of treasury bills. And of course, there's a curve out on X that you've probably seen where the holdings of banks is actually greater gold wise than there is for the US debt markets. That's a first in a long time anyway.
Do
Back
you
to you.
think do you think I should be worried, maybe as a German, as a European, or as an American, that owning silver is not allowed, as we've had in the past with gold? Do you think there will be like some confiscation potentially from any of the governments globally?
I doubt it. I mean, I still hold that stance. Doesn't mean I'm
Okay.
right. I mean, first of all, for gold is more likely than silver. I mean, there's two ways to think about the silver market. I'll address them both. From a monetary aspect, if you took all the silver out of the world, it would be 0.02% of the financial system. What good does that do you? I mean, you have to multiply gold by, or silver by 10 to get it to zero point 0.2. And that would be $470 gold. Oh, excuse me, silver. I'm sorry. So if you multiplied it by 100 to get it to be 2% of the world's financial system, that would be $4,700 gold. So it won't be confiscated on a monetary basis. However, on a critical strategic metals basis, maybe it could be. I don't want to talk out of both sides of my mouth. It's just when people think gold confiscation is for monetary reasons. Silver could be confiscated for strategic reasons. We don't have a war if we don't have silver. We are having a war, we need your silver.
Mm.
I think if that were to occur, there wouldn't be confiscation. Confiscation is really the wrong word. I mean, it's nationalized. They paid you some paper for it, but who wants paper? The reason we're in silver is we don't want paper. But anyway, the government, say, strategic resource, we need your help, and we will pay you 10% above the current spot market for the next 60 days, and we will keep lock it in tax free. You have no capital gains to pay whatsoever at all. Come forward. And in that basis, they probably be able to gather a lot of silver, especially if people were treated fairly. If it's that critical, that strategic, then reward them rather than punish them. So that's a possibility. David, what's your percentage on that? I give it about a 2% probability of it ever happening.
I see or I hear from you there's some sort of distrust in the current financial system if I'm listening correct in between lines. So like what's how do you live your life peacefully currently where kind of you live with your portfolio? How do you kind of trade silver potentially kind of making off high volatility? What do you make of it and of the current chances as for me as a trader out of the current situation?
Yeah, well, I basically don't trust the system. I haven't for a long time. So I don't keep a lot of exposure in the banking system, but I needed to, pay people, run the business, pay bills like everybody else. But I'm more of a hard metals guy the older I've gotten, which is what I say if you're a member of the Morgan Report, paid member. I ask you to read how to use the Morgan Report, and I go through if you're this age, you put this much in physical, this much split between silver and gold. The older you get, the more you should favor gold over silver. And then I go, okay, here's what's left of this, what's left. 70% goes into top tier cash rich companies like these streamers here, 20% into mid-tier stocks that are producers, a little bit of sprinkling into junior producers that are producing, and here's the rank speculations money can afford to lose. So that's how I do what I teach, and I show everybody in the report, what I'm doing and how I'm doing it, and then I'm just saving really for the time when perhaps, I mean, no one knows the future, where a new system is available that's fairer, but the way it's going, it doesn't look that way. But I'm looking to redeploy that capital into something useful, um, more than just holding money. When you think about silver and gold, especially gold, I mean, silver is both industrial and monetary, but it's a way to save without getting robbed by inflation. But it really doesn't help society at large. I mean, if you're a true capitalist, you want to do the paradox of I could spend my capital to make a business that benefits me financially, but benefits society as well. I come up with whatever. I mean, I'll just shoot one off the top of my head, but using the green theme instead of green energy, maybe a green chewy that takes care of all the depleted soil that we have, especially in the United States, and puts back the minerals and sulfur and whatever else our bodies need to be 100%. And people love it, and it's cheap, doesn't cost them much, and it's just a part of their daily routine. And I'm making a profit on it, but they're happy as hell, and so I'm benefiting them and myself. That's the paradox of true capitalism. So went off on a tangent there, but I think I made my point.
Yeah, and especially now, I mean, looking and to see the demand story changing, right? So like Elon Musk with Tesla and all the change in kind of carbon friendly economy, we see the demand story should outperform what we see in terms of what's kind of being digged out of ground, right? Do you see naturally that this is going to go on for the next whatever, a couple of say 5 to 10 years, that the demand from the economy will still continue to drive silver prices even higher?
Good. I mean, Mark Mills, who I admire greatly, did many, many interviews, but there's one on Facebook, and it's like a minute long. I wish I had it memorized, but there's a journalist, just an open guy doing his job, and he asks Mark, should we go all electric by 2035? And Mark looks at him and says, well, in a word, no. And then he goes on to explain that you dig up, 500,000, I don't know, tons of material to get, 1 barrel equivalent battery. And that's a carbon footprint of, huge amount. And
Mm.
then you take that, and what he does says you don't, you have an electric car with no emissions, but you export those emissions producing the car. And that how much, and then he goes on to say that to get to, all electric vehicles by 2035 would require more minerals than are available on the planet, period. End of story. Cannot be done. So does that mean that we can't have a nanoparticle machine that takes atoms and puts them together atom by atom to a molecule and makes anything we want? I don't know. I read a book one of my members asked me to read. It was basically that premise. And maybe we are getting to that future. I don't know. Point being is that it's very impractical. But to answer your question, I don't think the powers that be are that smart. I think they'll just keep pushing. And if they do keep pushing, then yeah, they're going to demand more copper, more cobalt, more lithium, more silver, more copper, everything you can name across the board. But we wrote a report on that. It was basis another report. So it kind of summarized it and talked about at present conditions to get the copper needed to go all electric. I forget, I'm making up the number because I can't remember the exact number, but the idea is clear. So at present mining capacity, you'd have to mine, 90 years worth of copper over the next, 3 years to meet the demand, potential demand, that type of thing. It's just impossible. So there will be nature has a way. I think there's a natural order to things that no matter how powerful man thinks he is, that nature says, nope, it's not that way. Like, trying to fly off a building in the whatever 1600s with something you built, try that at 10 feet before you do it at 80 feet, But anyway, I digress.
Technical price levels. You mentioned just now as well, 50 US dollars, psychological for me, technical level. I'm currently, as I said, slightly rather short in the market because I believe the market will come down lower. But looking at your outlook, and when we talked, I believe it was last about 5 years back, you said, Frank, I don't worry that silver at some point will reach 70, 100 US dollars. Would you still keep firm on those levels? Or what's your outlook, say, for the next 10 to 20 years for silver?
Well, that's really far out. I mean, I would think there'll be a technological breakthrough in the next decade or two that maybe graphene takes over solar panels, for example, and you
Mm.
don't need silver. But shorter term, I do think $100 is definitely achievable. I'm going to put that in print in 2003. And that was basis more of the monetary demand than the industrial demand. But I still think that's certainly possible. And I'm still committed to having a party here in Spokane. If silver gets to $100, it's on me. I'm not going to pay your airfare, but if you get here, uh, party's on me. So yeah, I think it could happen. Whether it will or not, I don't know. I don't know. I mean, it could go past that. Many of my peer group thinks, 100's laughable. It's going to 200. Some say 600. Some say 1,000. But I'm a very practical guy. I say, let's get through 50 first and see what happens. And if it goes parabolic, it starts going up $5 a day and goes, 55, 60, 65, 70, 75, 80, and it gets there in a month and a half. I'll be very, very concerned that we've gone parabolic. And I know anything, stock, commodity, automobile prices, women's hair color, you name it, when it goes parabolic, it doesn't last long. And that would be something I wouldn't want to see, because that means we're getting near the top of the market.
The Federal Reserve is certainly helping, right? A weaker dollar, prices for not only gold, but silver in particular, maybe oil as well at some point, another story, will evaluate or will move higher as well because of the dollar weakness, right? So at the Federal Reserve, I'm keen to hear what you think, but the Federal Reserve is just expected to kind of cut rates maybe twice this year. It should inflate prices as well, traditionally, right?
That's correct. But again, you got to remember that the Fed isn't as powerful as they pretend. I mean, if you've seen the Wizard of Oz movie, the big and mighty Oz, it's very scary. But then that dog goes over and brushes against the curtain. There's a little man pulling levers, and he says, "Don't pay attention to the guy behind the curtain." Right? So the curtain's been drawn back. So you could actually lower interest rates at the discount window, federal funds rate, and still see interest rates go higher in the 10-year, because the market says, I'm not buying your bullshit. I don't trust the dollar as much as I used to. And if you want me to hold it for 10 years, you got to pay me more money to do so. And that's already slightly taking place. So that would probably stress the gold market to the upside even more than just cutting interest rates alone, because what it's saying is what we talked about earlier, which is key, and that is bank reserves are looking at gold holdings as a more greater strength and more participation than the treasury market. Because the
Mm.
treasury market is sacrosanct. Everybody's taught to believe there's nothing more safe or secure than the sovereign debt of the United States of America, which is absolutely, totally, 100% bogus as you could be. Because there's absolutely no way on God's planet that you're ever going to be able to pay off that debt. So you're buying something that cannot be paid. And yet a lot of people still, and I'm talking about banks and international money markets and all that revolves around the debt markets and favorably to the United States Treasury markets, be it, T bills, T notes, or T bonds, believe in it. But do they really? And we're seeing that slip away. So that's the real story. And so we could see interest rates mandated to go lower, but the market says, not anymore. We don't trust you.
Perfect. Thanks a ton. Thanks a million, David, the Morgan report. Let's not keep it another 5 years until we reconnect here. And I want to hear your insights as well in the next couple of months to see where we're heading at. Guys, please leave your comments obviously under the video. Just don't forget to subscribe and check out David's pages, because he has a great report where you get fundamental technical insights into the silver market. David, pleasure to meet you again. Thanks a lot for your time today, and I wish you all the best. Chat soon.
Well, thank you.